To another episode of Parker Group Live, and we have a special guest for you this week that Rachel's going to introduce.
Yeah, so we always try to keep the topic, current, something that is on people's minds, and something that we are hearing a lot about from clients is concern over rising interest rates. So a lot of clients that have kind of been just passively looking at houses here and there, maybe they got pre-approved a couple months ago, and they're coming to us and saying, man, my pre-approval just went down because the interest rates are going up. So we thought it'd be a good time to talk about what is going on in the market right now, what are interest rates projected to do, and so we brought in an expert in the mortgage industry. We have Shawn Hunt from GMH Mortgage here with us, and he's going to fill us in terms of what he's seeing out there.
Definitely. So thank you for the introduction. It's definitely been an exciting, I'd say, past 4 weeks in regards to interest rates. We have seen an increase, which for the past, I'd say, 3 or 4 years, we've expected this to happen because interest rates have been at historic lows. We've seen them in the low 3% ranges, low 4% ranges, and we keep saying, okay, it's going to go up at some time. Well, now seems to be that time.
We're here.
Yes, we're here. The economy is strengthening. Everybody, if you have money in the stock market's been going up, which is great if you have a 401k or investments. But that also brings the interest rates with it. So we've seen probably over the past 3 to 4 weeks, probably 0.5% to a 0.75% increase in interest rates, depending on the program that you've been looking into. What does that mean for you? Obviously, it means potentially on a loan amount, with a higher interest rate, you could have a higher payment. Mm-hmm. For an example, on a $150,000 loan, a 0.5% increase, let's just say if your interest rate was 4.5% before, if it's down 5%, that could be a $45 difference in your mortgage payment. If you're a $300,000 loan, that could be a $90 difference with a 0.5% swing. So to you, that might be a lot. It might not be a lot, but that's something that could impact what you're qualifying for. So it's a good thing if you have been pre-qualified over the past couple months. It's a good thing to get back in touch with your loan officer to really see has anything changed. Am I still looking in the right price range? So that way I can afford what I want to buy.
Right. That's never the surprise that you want.
No. And some of those have happened, and luckily we've been everybody's still qualified as far as that goes. So we've not seen too much there, but it is a shock because when people are calling you, especially if they're new to the market, one of the big questions is, well, so-and-so just bought a house at 3.99. Well, it was there a couple weeks ago, but you have to explain the market. And, with the economy doing better, that's a great thing. And there's great things that come along with that. But one of the things that we're seeing is higher interest rates.
Are you anticipating that they'll continue to rise throughout the year?
Luckily, last week was kind of a stable week. The forecast is yes, they are going to continue to rise. If you watch the news, you hear the Fed talk about increasing interest rates, and that's different rates that does kind of reflect into the home interest rates a little bit.
Right.
But we are going to see that trend go upward. Freddie Mac in their estimate this year, we were going to see by the fourth quarter 5%. Well, we're already close to that in quarter one.
Yeah.
So I think things will stabilize a little bit, but the higher peaks are going to be there.
Yeah.
And throughout the year, you're going to see some peaks and valleys where it kind of does drop back down, depending on market circumstances. But for the most part, they're saying, for the immediate future, we are going to see that uptick still and some potential higher rates.
How is that going to impact buyers that are in that higher price point, like the $400,000 plus? They're looking at some jumbo products and some different things.
Same thing. I mean, interest rates, on those are going up as well. So It's not specific products that have increased. It's across the board.
Gotcha.
All lenders are seeing it as far as that goes. So the pricing, when we look at interest rates, not dig too much into that, the pricing associated with rates differs every day, and that's what we watch and what varies. But depending on what they qualify for, that's what's going to control it. But they're going to see an increase as well, into those hires. And jumbo loans, for the past 4 years, really kind of go with the non-jumbo or what you call conforming loan amounts. They've been right in line.
Okay.
You might see a slight uptick as far as what they're looking for.
So your advice to buyers that are currently in the market is to lock in soon?
Yes.
Because rates may continue to rise?
Yes. The advice definitely is to lock in. If you're a risk taker and want to play the game, that's all for you as far as it goes. But definitely the advice right now is if you're comfortable with the interest rate that you have, comfortable with the payment that you have, lock it in. Because there's a higher risk that rate could go upward rather than come back down right now. That's what we're seeing.
All right. Well, if you have questions, give Shawn a call, give us a call. We can certainly point you in the right direction and help you through the process. We're glad that you joined us. Let us know if you need anything. Thanks a lot, guys.
Thanks.
Great week.